Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at CRDO, or Credo Technology Group Holding Limited. CRDO is a provider of high-performance serial connectivity solutions for hyperscale data centers, 5G carriers, enterprise networking, and artificial intelligence in high-performance computing markets. Here's the barchart.com technical opinion rating for CRDO. The bar chart rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that CRDO is well above the moving average line, so the monthly trend in CRDO is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line is above the green line, so the daily trend in CRDO is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. CRDO is 4 cents or 4 1,000ths of 1% above the upper Keltner channel line, so we're going to call that good enough. Since the trend is up, we want to buy a call. CRDO has 7 option chains to choose from. We're going to use the July 18 option chain. Right now, the July 18 options have 12 days to expiration. Here's part of the CRDO option chain for July 18. The strike prices are listed on the far right side of the chain. CRDO closed at 93.61 on Friday. That means any calls on the list from 65 to 90 are in the money. Let's take a look at the profit potential for purchasing the 95 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 95 call is 410 to 440. We tried to enter at the midpoint, so we'll use 425 as the buy price. Our call option calculator shows the profit potential for this call based on CRDO price changes at option expiration from flat to a 12.5% increase in price. We can see that if the CRDO stock price is flat at 93.61 at option expiration, the 95 call will lose 100% of its value. Ouch! This is an unacceptable risk. That kind of loss can wipe out a trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 90 strike call to see if it qualifies for the 1% rule. Here's the call option calculator picture for the 90 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the CRDO stock price is up 1%, the 90 call will lose 100% of its value. We want that to be break even or better, so the 90 call does not meet our requirements. No, we're on 8. We got to go down 1. Down 1. Let's see if the 80 call will work. The bid-ask spread for the 80 call is 1410 to 1490. We try to enter at the midpoint, so we'll use 1450 as the buy price. The 80 call works. If the CRDO stock price is up 1%, the 80 call will make a 0.3% or $5 profit. That's better than break even, so the 80 call is the one we'll buy. The call option purchase calculator also shows that if the CRDO stock price increases by 2.5%, the 80 call will make a 10% or $145 profit. If the CRDO stock price increases by 5%, the 80 call will make a 26.1% or $379 profit. If the CRDO stock price increases by 7.5%, the 80 call will make a 42.3% or $613 profit. The plus 10% and plus 12.5% numbers are also displayed. you can see that the profits get better and better. Down. Next slide. And notice that if the CRDO stock price does not make the expected move up and remains flat at expiration, the 80 call would only lose minus 6.1% or minus $89 compared to the minus 100% or minus $425 loss for the 95 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the CRDO July 18 80 strike call and sell to open the July 18 90 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 80 call for $14.50 and sell the 90 call for $6.90. $14.50 minus $6.90 equals $7.60. So the entry price or debit cost for the spread is $765. The call option spread analysis calculator picture shows that the spread will make a 1.6% or 31.6% or $240 profit if the CRDO stock price declines by 2.5%, remains flat, or increases in price when the options expire. If CRDO is down 7.5% at expiration, the trade will lose 13.3% or $101. Creating the debit spread will allow us to collect a $690 cash credit to our brokerage account for the sale of the 90 call. As we said on the previous slide, this reduces the cost of entering the spread to $760. Here's a note regarding earnings reports. The next CRDO earnings report is scheduled for September 1st. Let's review the trades one more time. The first trade was a call purchase. It said to buy to open the CRDO July 18 80 strike call for $1,450. We also reviewed the spread. The spread said to buy to open the CRDO July 18 80 strike call and sell to open the July 18 90 strike call at a debit of $760. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.